Welcome everyone, and first of all, thank you so much for coming and being brave enough to come to a presentation about finance and accounting and financial literacy. Before we dive into it, I want to kind of place a few bets with you and see if my predictions are actually correct. So what I'm going to have you do is rewind in your mind about 5 months or so ago, right on New Year's Eve, so December 31st. So if you remember, we were all cooped up at home. You were probably wearing your comfy clothes, sitting on the couch, trying to debate, what are my New Year's resolutions? And I'm going to bet that none of you placed a New Year's resolution that this year, 2021, you want to learn more about finance and accounting. It's possible some of you were, and you're special, maybe you and I are kindred souls, but I'm willing to bet most of you probably didn't. And there's typically 2 reasons for that. One is, as an industry or as a profession, we have a little bit of a PR problem, right? So how many of you, when you think of accounting, an image kind of like this guy comes to mind? And so I'm hoping to really break that down for you to see that that's not actually the case. I am also an accountant, and I pride myself in never ever having owned a pocket protector and never ever will. But the other reason you probably didn't set finance and accounting as one of your goals for the year is that the connection isn't always completely obvious. So if you're working in land, or you're a commercial professional, you're working in an upstream energy company, chances are you have no desire at all to turn around and become a finance person or become an accountant. So why would you actually want to learn some of this? So I'm going to make another couple of predictions. So most of you probably have a lot of competing priorities going on right now, and you probably have a whole ton of, emails, and you're just trying to keep up with everything. But when you step up above the busyness of everything that is going on, my 2 predictions are that you probably want opportunities to progress in your career. And you probably also want a little bit more safety and security to know that your job, your income, your family, your future is going to be secure. And believe it or not, financial literacy and understanding your company and your business's balance sheet and cash flow statement and income statement can actually help you achieve both of those goals. So I know that it doesn't seem like an obvious connection, but actually understanding financial literacy can help you with both of those. One thing that is an absolute fact is if you do not have financial literacy, whether you're a land person or you've worked in an oil company for 20 years or you're well connected in that field, for a fact, you are going to hit a plateau in your career if you do not have financial literacy. And it used to be that plateau would happen when you're trying to move into a C-suite role, but more and more, the expectations to know the numbers and understand how the business model and how the actions that you and your team are taking, more and more of that is getting cascaded down to more and more junior levels across an entire organization. So in the past, in like good old days, boom times, that might not have been quite as critical, but in 2021, with very, very challenging market conditions, economics being very constrained, it is that much more important for companies or for individuals in companies to really understand the financials of the companies that they're actually working with. And so maybe some of you are saying, okay, yeah, that's great, but I'm at this point, I'm not really worried about getting my next promotion. I just kind of want to, keep my job safe. All of my coworkers have been laid off, or I'm seeing really good people and I just want to kind of stay secure. Well, understanding financial literacy can actually help you in that way because it gives you a lens to understand how you can spend your time and make suggestions and ideas that are ultimately going to move the needle and ultimately going to enable you to add more value in your career. Or if nothing else, it helps you be able to read and interpret and analyze the big picture of what's happening in your company and in your industry so that you can buy yourself some really precious time to kind of figure out and navigate, what does this mean for me and what do I have to do as a result? So I hope that has kind of persuaded you about why you should kind of pay attention throughout this presentation and why you might want to, try your very best to pay attention when we start talking through balance sheets and income statements and all of these other concepts, because they actually do have a very real impact on your career and on your day-to-day. So with that, what I'm going to try to do is actually give you a crash course. So like Alexis mentioned, I have studied finance and accounting and taken so many advanced technical classes that you just don't even want to hear about all of them. But I'm going to do my best to really simplify it for you and really try to demystify it and break it down into the essentials. Anything in the world you can take and make far more complex, but what we're going to try to do is simplify as much as we can. So when I talk about financial literacy and when I talk about the financials, I want you in your mind to think of two pieces of paper. That's it. That's all it is. It is one piece of paper that says your revenues and your expenses, meaning how your company makes money and what you're spending the money on. And I want you to think of the second one of being your balance sheet, meaning what does your company own and what does your company owe. At the end of the day, as much as there's so much complexity when it comes to financial literacy, if you can always go back and anchor yourself that financials, accounting, financial literacy, it is two things and two things only. A piece of paper that tells you money coming in and money going out, and a second piece of paper that tells you what you own and what you owe. You've basically, if you can keep everything anchored in that mind, in your mind, you've got the basics, you've got the foundation. Now, in every single industry, the specific subcategories under revenue and expenses are going to look very, very different. And the squiggly lines that I've depicted in here are going to look also very different for a different upstream company as compared to a manufacturing sector or any other industry. So what we're going to try to do here is just think through your business, your company, or your peers, the other companies that are in your industry, or perhaps you're a contracting company where you work with and you secure contracts with some large upstream players or maybe some natural gas players. You want to kind of think through what would be some of the categories that are going to fit under these different buckets. So let's start with revenue. And this is one that if you're thinking of a traditional business, you're selling widgets to such and such a person at such and such a price. And we can really think of like a widget business. It's so simple. But when you start moving into large energy companies, and like Alexis mentioned, I was at Suncor for a while and several other companies on the electricity side of things, we become a little further removed, right? And we kind of become further removed from the end customer. And what we have to remember when we go back to the financials and we go back to the revenue is that revenue number is telling you you are selling something to someone at some price. So when you look at these complicated financials, there's three things that you need to answer under the revenue section. What are you selling? And you are selling something. So for a lot of you, it might be that you are selling units of oil or you are selling units of natural gas. That's what you're selling. So that's what you're going to see under revenue is going to be what you're ultimately selling. And then who you're selling it to. And again, this is where we get a little bit further removed whenever we're dealing with companies that are more so selling to businesses. As you might think, well, we're not really selling to anyone. Sometimes people fall under this misconception of thinking or using terminology that makes them think that it is so much more complicated. So you might hear some people say, well, we don't really sell anything. We just have long-term contracts, or, we have a trade floor, or we wholesale, or we'll kind of use this language and this terminology. But if you are in business, you are selling something to someone. So you might hear it described as a counterparty, but ultimately it's someone that's buying the stuff that you're selling. So regardless of how big your company is, always go back to the basics and go back to the fundamentals. Every single one of you are in a company that's selling something, probably oil and gas, to someone, which is probably not your end consumer. It's probably some form of a middleman or a middlewoman, but that's who you're selling it to. And you're selling it at some price. And that price for many of you will actually be, WTI, or it'll be some different benchmark commodity price indexes. At the end of the day, if you can look at any financial statement and see revenue and anchor yourself in those three questions, you're going to be that much further ahead than most people. Because what a lot of people do is they look at a set of financial statements and they hear and they see words that are complicated. They see words that they don't really know what they mean. It gets really into all of these details. Ultimately, revenue is just telling you the answers to those three questions. What are you selling? Who are you selling it to? And how much are you selling it for? And then expenses is the other aspect of your income statement. And what I would say first, as we go through some of these different concepts, I should mention, for some of you, this will be a review. So some of you will be at a level where you're very, very proficient with financial statements. So some of this is probably going to be concepts you're already familiar with. But even if you hear it explained in a way that maybe is slightly new to you, you might just get a more nuanced understanding of it. And for those of you that might be earlier on in your career, this might be kind of over your head and it might be overwhelming. Don't let it overwhelm you. If you can walk away from this presentation just remembering one small nugget or one small concept, you're going to be that much further ahead. So regardless of where you are on this spectrum, because I know we have a broad range of different familiarity with these concepts, just take it with wherever you are, go deeper, or just grasp the fundamentals that you can. So let's go back to expenses. So whenever you look at your income statement, you've got revenue and you've got expenses. Now, things can get complicated whenever you start thinking of expenses in all of these different categories, right? So you might hear things like, who's heard of, G&A or operating cost, or heard, depreciation, or some of your transportation charges, to get energy from point A to point B. All of those things are just different expenses, and different companies are going to categorize them differently. Ultimately, it's just money going out the door. It's things that you're having to spend money on as part of your company. So there's a broad number of different expenses, but don't worry so much about the subcategories of, is it grouping here, is it grouping there? It's just anything your company is having to spend money on. So we'll park that for income statement. What we're going to do as we get a little bit further is actually pull up a few of the financial statements for a few companies, and we'll kind of see what this actually looks like for some companies in your industry. Now, on the right-hand side, you're going to see our assets and our liabilities. So remember, all of this, whenever you're seeing these unusual words, what you own and what you owe. And I think this is one where it might be best to actually pull up some of the examples so you can start to think, what does that actually look like if you're an energy company? So let's go into some of that here. Let's actually pull up some of the statements so you can take a look and you can see what would that potentially be. So you can probably take a bet that your assets are going to be things like what your energy company owns. So for many of you, that might actually be some of the properties and the assets and the E&P assets that you own. So let's actually pull one up, like I mentioned, and we'll take a look and we'll see what does that look like in practice. So what you see here is the financial statements for Canadian Natural Resources. And actually, maybe what I'll do is while I'm kind of walking through this, I'll get you to put in the chat if everyone on here knows where and how to get the financial statements for their company. If you don't, throw it in and you're interested in knowing how, throw it in the chat and I'll take a couple of minutes to show you exactly how you find these different financial statements. So I'll take a peek at that in a second. But while we do, let's actually take a little look at what the financial statements look like. So this is Canadian Natural CNRL's financials. And what we're going to do is actually go all the way down. Don't worry about all the lines. And remember, it's always so easy whenever you're looking at financials to get really overwhelmed. But all we're going to do is go to those two pieces of paper. Remember how I told you that there's only 2 sheets of paper? You're just scrolling. Everything else is just context. We're going to go all the way down. Give me a second. It's a very lengthy document. But we just want to get to that income statement and that balance sheet so we can kind of see how those concepts, those 5 words that we had on there, what does that look like in a real example? Let's just keep scrolling a little bit further. And one of the things that you might find as we go through, this is 116 pages. What happens is a lot of people look at those 116 pages and they say, oh my goodness, it's so complicated, I can never learn this. But you really can. It's just a matter of needing someone to walk you through some of it. So here we go. We are there. Okay, we made it. So page 63 is where you find that second piece of paper, which is your assets, your liabilities, and your owner's equity. So let's take a little look and see, if you were CNRL, what's sitting on your balance sheet today? So the assets section, what we can see is actually $75 billion, right? These are in millions. And what is that? What are those assets actually made up of? Well, you can see all of these categories up here above, but we won't go through all of them. We're going to have around 40 minutes or so we're not going to go through them in a ton of detail. But what I want you to notice are the really big ones showing up under assets. And the 2 biggest ones that I'm seeing are property, plant, and equipment and exploration and evaluation assets. So that kind of makes some sense, right? If 65 billion out of 75 billion is really the land and the mining and the upgrading and the refineries and like the actual reserves that your company owns is going to show up under this category of property, plant, and equipment. So that makes sense given the nature of your business. The exploration and evaluation assets is the next largest number, and it's very similar to your PP&E. It just tends to be those resources in the ground that aren't yet proven. You know, you probably think that there's something there in the ground that you can actually get out of, but it's not as certain or it's not as proven as your PP&E balance. But those are the two really big categories of what is sitting under your assets. And if we look up here a little bit further, we see accounts receivable is the third biggest. And again, when you're looking at anything in the accounting and finance land, just remember that it's a different terminology, but accounts receivable just means someone that has promised to pay you in the future. That's all it is. So it's something that you actually, it's something that you ultimately own. And I would say our fourth biggest one on here is inventory. So that might be some units of some barrels of oil that you just haven't sold yet. It might be some natural gas that, again, you own and you just haven't had a chance to actually transfer over. So this is what a real life balance sheet looks like. So let's flip back again to our presentation where you can kind of see that what we did there is we scrolled through this great long document and we went and we found that there's two relevant pages, and we found the relevant page for the balance sheet. And what we did is actually look through, you know, in real world, what do some of these assets look like for a real company? And not surprisingly, we saw it was PP&E. We saw it was some exploration assets. We saw it was basically some customer IOUs of promising to pay later and a little bit of inventory. So that is really what your balance sheet is comprised of. We can go back and take a little look at liabilities, but before we do, I want you to just think, what in your mind are you anticipating liabilities to look like? So just give it a second and I'm going to pull it up and we'll see if what you were thinking of was actually correct. Okay, got it? So here we're back on that same balance sheet and we're actually seeing what are the liabilities. And what do we see are the really big ones? Well, we see long-term debt. That seems to be the really big one. 20 billion is there long-term debt? And then here we have our deferred income tax. So meaning you have to pay the government some type of taxes that are still owed. Those tend to be the really biggest ones on here. We also have other long-term liabilities. And for those of you that have seen these kind of financial statements before, you're probably very familiar with this column that says notes. But some of you might be looking at this and saying, oh my goodness, I've never seen this before. It's got like 80 numbers. How do I possibly make sense of this? And what does this 8,12 mean? And I have no idea what this is. Don't worry, these are just notes that tell you where you can go find more information. So if we think about the liabilities in this section, we can actually see that the top three are long-term debt, which is not surprising, right? There's people lending you money to be able to run your business. There's money you owe to the government, but you're probably wondering, other long-term liabilities, like what is that? Like what kind of animal is an other long-term liability? So what we can actually do is scroll down to where that particular note is. And I think in this case, we're going to actually just jump right to a concept that I think is important for anyone in this industry to be fairly aware of. Asset retirement obligations. That's going to be one of the other large categories that you'll likely see within these within this particular financial disclosure note. Okay, here we go. So if we scroll down a little bit further, we want to go down to that particular note where we had seen note 12. So don't get too distracted if you kind of saw it jumping around and you're saying, what are these? What do these different screens mean? Don't worry about those. What we're trying to do is find note 12. So if you remember on the very top, it said other long-term liabilities and said like 8,12. So all we just did there was just scroll down to note 12 and we're saying, well, what animal is this other long-term liabilities? And we look down and we can see this is the same number that we saw on that very face of the balance sheet. And we can see that the very top one on there is asset retirement obligations. maybe using the chat button. Has anyone heard of or familiar with asset retirement obligations? It's a pretty common term that you probably will hear quite a bit of if you are in like the land space or in the commercial space. And ultimately what it's going to mean is what your company has a legal obligation to do to restore the land, to restore whatever the area is. So it is a liability. It's something that you owe money to, but you don't have necessarily an immediate invoice. It's something that you're going to owe money to, but it might just be kind of a little bit unknown exactly in amount. There's going to be estimates around it. That's kind of the top three that we kind of see on this specific company's balance sheet was, debt owed to creditors. We saw debt owed to, so we saw our debt owed to creditors, which is long-term debt. We saw our debt owed to the government. Government, taxes and death, they say, are the only two certainties in the world. So, of course, we have some money owed to the government, which is this 10. And then our other long-term liabilities is the third biggest number on there. And that's primarily a legal obligation that the company has to be able to really put the reparations in place that need to be to restore the particular land in the area. Okay, so let's come back here. So first of all, good job on getting that far, because 99% of people never actually go and look at their company's balance sheet. It can be very fear-inducing and kind of anxiety-inducing. So you went through something very, very difficult. It might have kind of felt like a little bit of a blur. You might have kind of felt like, I don't know if I totally got all of that, jumping around a little bit. But what I want you to know is that every single one of your companies has a balance sheet. You can find the balance sheet, and the balance sheet is made up of things that you probably intuitively have some level of understanding for. So we saw the assets and the liabilities in here. I'm going to jump to cash flow, because some of you might be thinking and kind of screaming right now saying, like, how can you say there's only two pieces of paper and an income statement and balance sheet? Did you forget about cash flow? My company's obsessed with free cash flow. What is this all about? So you're right. There is a third piece of paper. And it is our cash flow. And your cash flow is going to take what happened within the particular year, and it's going to group it into three different categories. So we call our financing, our investing, and our operating categories. So what I might try to do is maybe I'm just going to try and pull up the screen here so I can actually see the chat button of if anything has come in here. There we go. Nope, nothing. All good. Okay. So I want you to mention to me in the chat if you have ever heard free cash flow talked about in your organization. Is that a term that anyone has heard in some different company presentations? Is it something that you've heard your executives talk about in some different town halls? Is it a term? It's a very common term that investors end up looking at and looking for. But it's actually one that you're not going to find on your company's cash flow statement. And a lot of times people are really surprised by that, because they're saying, well, your cash flow statement, okay, so it tells me what happened during that time period, and it groups it into these three categories of financing, investing, and operating. But how come everyone at my company is talking about free cash flow, and that doesn't seem to fit into any of these different categories? So what I think is really important to know and to understand when it comes to free cash flow is to kind of go back to your own home economics, to go back to your own, think of it, if you weren't a company, think of it as yourself as an individual, to understand what does that mean. So pretend you got your paycheck, and it was a big paycheck, and you were, happy about it. It's great. You got your big paycheck, and you realize your kids need braces and the roof of your house is caving in. The question becomes, do you have good free cash flow? Well, not really, right? Because you may have gotten your paycheck coming in, but you have all of these items that you're committed to. It's not really free cash flow. It's cash that's already committed to. It's things that you ultimately still have to spend money on. And in contrast, if you were to think of the free cash flow of, say, your peer or your colleague that maybe receives the exact same paycheck, but say their kids are out on their own, independent, self-sustaining, and their mortgage is all paid off and they have really pure discretionary income. They may be bringing in the same money, but their free cash flow is very, very different. So the same concept can ultimately apply for a business or for a company, that your free cash flow is going to be using this part here of your cash flow statement, your operating cash flow of what came into your business. and it's going to exclude some of the capital expenditures that you have to make just to keep the lights on, just to maintain the status quo. So it's something that a lot of your executive are probably paying a lot of attention to, this idea of free cash flow. It's something that a lot of investors are very, very interested in, but you won't ultimately be able to find something called free cash flow on your financial statements. So I'm going to flip back and I'm going to show you a couple of cash flow statements, and we're going to ultimately prove some of that out. Okay. So this is what a cash flow statement will ultimately look like. This is, again, we'll see the same one for CNRL, but we'll flip through a few different examples. So if you recall on that slide, I said that your cash flow statement is going to be grouped into 3 different categories, and that's exactly what you see here. O for operating, F for financing, I for investing. And I know you won't have time to kind of read through all of these, so you'll have to take my word on it. You will not find on your cash flow statement the concept of free cash flow. You won't see it written on in there. So what you ultimately need to do is focus on the operating activities, this subtotal in here, and then you have to determine, well, what does my company have to spend on in terms of capital expenditure, maintenance capital expenditure in the coming year. To give you another example, we'll pull up a couple others, and you can kind of start to get oriented around this idea of there's 3 pieces of paper we kind of want to focus on. So this is another example, and again, what you're going to find is it's 56 pages. Most of these are, 50 to 100 different pages, but don't let that overwhelm you. Just anchor yourself in ultimately finding those 3 pieces of paper across all of the graphs and all of the tables. You just want to really find the balance sheet and the cash flow statement. So let's scroll our ways all the way down in here. So here we have the balance sheet. So if you remember that page when I was kind of saying like what you own and what you owe, and similar concept to what we had seen when we looked through CNRL, we can see that the really big line item on here is also property, plant, and equipment. And we can see that the really big expenditure is, again, long-term debt. So that's kind of what the balance sheet is ultimately telling us. A very similar story for this company here. This is going to be, when we kind of talked about revenue, we can kind of see that it's grouped into those 3 notions of who are you selling to, what are you selling, and what are you selling it for. So we're kind of seeing revenue in here. And then expenses are going to be a whole hodgepodge of things that you spend money on. So we can see the categories in here. And then we're going to go down and we're going to see, again, the cash flow statement. So this is the cash flow statement, and you're going to see it's always grouped into these same 3 categories, right? Operating, financing, and investing. And again, you're going to be seeing that the free cash flow line doesn't appear on here, but you can get a very good proxy for it using operating activities and looking at what your capital expenditure is going to be. So we'll do maybe one more just to give you kind of an example that hopefully, what I hope that you're kind of getting from this is, even if you're looking at these and you're saying, oh my gosh, it's a blur, it's so much information, what I want you to realize is that you actually can look at it, you can start to put it in these like very basic categories and say, all right, I see a pattern across this, because as you start to detect some of these patterns, you'll be better equipped to be able to read and interpret these financial statements for your own company. And don't worry if this is the first time you're seeing some of this and it's over your head, that's okay. Just grasp the concepts that you're able to make the most sense of, and we'll spend some time at the end of this presentation going into some more details and some questions that you might have. Okay, so here's another financial statement, and this one is for ARC Resources. And we're going to do the same thing. We're going to look and we're going to say there's 118 pages in here. And are we going to say, panicked, too many pages, I can't make sense of it all? No, we're going to say there's 3 pieces of paper in here that I care about. And so you're going to scroll, and you can obviously use the table of contents. It's probably the quickest way just to jump right there. But there's really just 3 things that you're kind of trying to start with to anchor yourself. And we'll go all the way down here. Again, looking for that income statement, like your profit and loss statement, your balance sheet, and your cash flow. So we're just going to do a whole bunch of scrolling. Obviously, you can use the Control Find button. That's probably a faster way to ultimately get you down there. But what I want you to do is whenever you're pulling these statements up for yourself, for your own company, I want you to get comfortable scrolling through and not feeling like, I need to panic and read all 118 pages. You can read all 118 pages, but start yourself start anchoring yourself in the statements and then go back and get a little bit more context. So we'll scroll a little bit more, bear with me here. All right, almost there. Okay, here, we made it. Okay, so this is going to be the third balance sheet. And remember, when we think balance sheet, we're thinking of our assets and our liabilities. And again, are we going to see the exact same pattern? We're going to see a really similar pattern, right? Where what's the biggest line item on the balance sheet? Well, it turns out to be same idea as what we saw with CNRL, same idea as what we saw with PATO. We're seeing that property, plant, and equipment is the biggest line item under assets. So not a big surprise. And when we're looking down on liabilities, what are we seeing are some of the bigger dollar amounts in here? Nothing massive standing out, but again, we're seeing asset retirement obligation is pretty sizable, and long-term debt is also fairly sizable. So we're noticing certain consistencies or certain similarities in trends whenever we're looking through these statements across different companies. This is going to show us our another income statement. And again, remember the three things you got to remember with your income statement, right? Is you're selling something to someone at some price. So the something you're selling is commodity sales. And here they're presenting net of royalties. So there's not a lot of detail here on the commodity sales, but where this number came from and where this number is derived is really what you're selling, who you're selling it to, and at what price. So kind of use that as you're making sense of what these numbers are. And then lastly, we're going to jump to the third page, which is your cash flow statement. And what I want you to notice on here is just like we saw in the other examples, you're going to see the exact same pattern of seeing operating activities, financing activities, and investing activities. So if you can just remember the FIO, you're always going to see that on your cash flow statement. And it's just the way of grouping what happened in this business, and of what happened in this business, how do we categorize it into these three broad categories. And similarly here, you're going to look at it and you're going to say, well, I don't see free cash flow, but you do see operating activities. And you are going to know what you have to spend in the coming year on some maintenance capital or some of your CapEx. So that's kind of as much detail as I'll go into the statements for now. Of course, there's some simplification going on in here. You know, you could study finance and accounting for, decades like I have, and you could go really, really detailed into it. But I think if you just really step back and simplify and put it into those different categories, it'll at least give you a way to start yourself on a path of increasing your financial literacy. I do need to throw in a few little jokes along the way because you've done really well so far. So I don't always make bad accounting jokes, but when I do, they don't add up. Gotta love it. Okay. All right. Maybe I'm the only one that does. And it's a cruel world, if you get it, like a cruel. Okay. All right. I'm done. We'll shift gears. No more of the bad accounting jokes. We're going to shift gears. I'm just going to take a quick peek into the chat here just to see if okay, so the question is what and where. So you're going to use, so free cash flow is going to be, you're going to be grabbing your another way of explaining free cash flow, just to answer the question in the chat there, is to think about what cash is available to be able to do one of three things. So what cash is going to be available for me to pay out to my shareholders, to pay off my creditors, or to reinvest in my business. Ultimately, that's going to be what your free cash flow is going to represent. So it's going to be, starting with your cash flow from operations and kind of backing out all the things that you have to do so that the only thing left with your free cash flow is the choice. It's that discretionary spend. It's that uncommitted spend, so that of what's left, as a company, you can make the best choice of how do I spend the free cash flow of what's left to either give more back to my shareholders, reinvest in my company, or pay off my creditors. Different people will calculate it in slightly different ways, and there are certain different conventions in there. But if you kind of get the concept together, you can usually understand what it's trying to signify. So I hope that helps. What I now want to do is kind of take you through a hack that I like to use whenever I look through some different financial statements. And I call it SMART. I kind of just invented this as an acronym just as a way to kind of help me, because I'm sure like you as well, if you're looking at some of these statements, especially if it's a new industry, especially if it's something you're not used to looking at, you could see as I was scrolling through gazillions of numbers. It can be overwhelming, right? So if you had just opened up that document on your own, you would probably, your head would start to spin. You would say, I have no idea what this is, panic, close, XXX, and close it out. So what I want you to remember with SMART is this is a way that anytime an email, a document, something crosses your desk and it has numbers on it, I want you to just do like a 30-second pause and look at it through this lens of SMART. So each of the letters is just a way ultimately for you to get in your mind and to figure out what is it that I'm looking at, so that when you understand what you're looking at, you can make a sense of like, okay, what does this mean to me? So S stands for scope, M is materiality, A is ask, R is relative, T is transaction. So let's look at what that means as a little bit more of an example. So scope is where you pretend to be a reporter, right? You have a piece of paper in front of you. You don't know what that piece of paper is. You want to ask yourself, who does it represent? What is it telling me? What is the scope of what it's included in here? When is the time period? Where does it relate to, and why? So you just kind of want to get that. You might be someone where you get a spreadsheet sent to you by an accountant in your team, or and that accountant is sending it to you, but you want to know, who does it represent? Is it who representing your entire company, or is it who representing your specific department or your business line? What is it showing me? Is it showing me revenue? Is it showing me expenses? Is it showing me a subset of expenses that are within my department? When? Is it showing me just this month? Is it showing me this year? Is it showing me a trend of 10 years? Where will pertain, if it's including just a sub business unit, is it, where is going to kind of, again, be very much related to that scope, and why? What's the purpose behind it? So if you're looking at a financial statement to, I guess a good example would be if you are involved in any M&A activities in your organization. So maybe you get looped in to help with an acquisition that maybe your company wants to do, or maybe divesting a particular asset. The why is really important to understand the context of what you're looking at, because again, anytime that I say something like M&A or divesting and acquisitions, again, those words can sound really confusing and complicated and like, what are these people talking about? Go back to the fundamentals. All of it means is someone is selling something to someone else. But in this case, instead of it being your core product and the energy commodity, you're actually looking at divesting an entire asset, an entire property, an entire piece of land. And so the why, how the why fits in there is, are you going to have a different context if you're looking at it from being the perspective of selling an asset versus the company acquiring and buying the asset? You are, right? Because if you're the one selling and you're working for a company that is trying to sell an asset, you're going to want to look at the financials through the lens of what's going to be accurate, but present the asset in a way to be able to get the highest price. And if you're the buyer, you're going to want to look at it through the lens of, well, why, what might be missing, what might be the risks, what can we do to kind of get this thing for less money? So the why is kind of anchoring the context of why you're even looking at the financials and what that lens might be. What I would say, again, with the 5 W's is, don't get too hung up on, what exactly is what exactly is where, what exactly is when. Ultimately, what you need to remember with the 5 W's is just that you give yourself 20 seconds to pause before you dive into 80 numbers that are swimming around everywhere, and just anchor yourself of like, okay, what am I looking at? What am I trying to accomplish? What's the scope of what's in there? Don't get too hung up on, what does this W versus that W mean? The idea is just to anchor yourself before you get too much into the details. So SMART, we covered the S. M is for materiality. And here what I want you to think about for materiality is, if you remember the way that I walked you through the balance sheets, did I start at the very top and work my way all the way down to the bottom? No, right? I actually jumped around. I went up here, then I went down here, and then I went up here, and I went all over. But there was a certain logic to that jumping around, and it was based on materiality. So what you want is to start with the biggest dollar number, and the next biggest, and the next biggest, and the next biggest, because it's a piece of pie, and not every single line item has the same weight. So anytime you're looking at anything that crosses your desk, any document that gets emailed to you, you always want to make sure that you are spending your time appropriately to where the materiality of the line items are on the financials. And so that's kind of what we did when we looked at the liabilities, and we said, okay, well, this liability is really only, 0.3%. We spend more time on the bigger ones, and those will be the ones that you'll want to dive into a little bit further. So M stands for materiality, which is, start with the big guys, understand the big guys, and then work your way down the statements to the details. A is for ask. So as long as I've been looking at financial statements, and I've seen gazillions of them, maybe not gazillions, it's not a very precise number, but I've seen a lot of them, let's say. You are always going to go through them and have certain questions that aren't going to be obvious. There's going to be some things that you want to be asking yourself as you go through. So one of the most simple things you can do is just literally grab a pen and a paper, and as you look through the financial statement, jot down the questions. Jot down the I see this, but what does this mean? What does that actually mean in the real world, right? So make a list of the questions and then the ask, because this is the thought process. This is the analysis. This is where you're interpreting it. And it's totally normal to look at them and still have some outstanding questions. That means that you're actually looking at them with a very active lens, and that's how it's going to be beneficial to you. So if you look at financials and you see some things in there that you don't understand, don't view it as, oh, I just can't understand numbers. View it as, that's a good thing. That means that you're mentally alert as you're going through this, and you're going to come up with your list of things to ask. Now, once you come up with your list of things to ask, well, what are you going to do about it? There's a few things that you can do to kind of get a better understanding. So one is called disclosure notes. And I didn't explain this as we were going through it, but I'm going to touch on it a little bit now. So if you recall when we were looking at the asset retirement obligation, and I kind of scrolled all the way through this great big document, and then I went down to note 12, and I was kind of talking about that particular note, and it was explaining other long-term liabilities. Those are called disclosure notes. So if we think about those great big documents that have hundreds and hundreds of pages, many of the pages in there are disclosure notes, so that whenever you look at that one page that's really important, you can go and read paragraphs and paragraphs and pages of details on some of the line items. So the disclosure notes are actually there as a massive resource for you to be able to find out some more. And so that kind of falls a little bit under the self-solve. You're going to look at it, you're going to look at what is available to you that you can read to get a better understanding. You can look at what's industry standard. So maybe you end up looking at a set of financials and you can't really make sense of it for your own company, but if you pull up the financials for other companies that are in your industry, you might see it explained in a different way that resonates more with you. So you can kind of look to some of the industry standards to make sense of it. And then, of course, the other easiest one is make a friend in finance. Go reach out to someone in finance and say, I really want to learn more about this. I want to understand what this means. And it doesn't mean that the first person will necessarily, have the right example to you, but you would be surprised how many people work in I know at least myself, whenever I used to work in corporate, I would love whenever people would come and they would say, help me understand this, So what I would say is people in finance, people in accounting can be your friends. They can help you understand and make sense of this. So it's a resource at your disposal. So be sure to use it. So we talked about S, M, A. Now we're going to talk about R. So the R in SMART stands for relative. And sometimes when you're looking at a set of financials, you're going to want to say, well, is this good or is it not good? So if you're looking to take a job with a particular company, you'll want to look at their financials, but you'll want to know, are they on the brink of bankruptcy? And if I were to go work there, they're going to go out of business tomorrow. You would want to know that. But how do you know what is good? Is usually by looking at it relative. So R is for relative. Relative to what? So relative to the past, are they doing better financially now than they were before? Relative to their peers, if the industry as a whole is hurting, but they're doing better than others, that can be good. Relative to their plans, so where did they think that they were going to be and did they hit it? And then just relative to other non-financial performance indicators. So you'll want to look at not just the numbers, but look at the numbers in context of other things happening in the company. So that might be barrel of oil reserves. That might be just broader than just the financials. When you look at the financials and combine them with non-financials, that's where the performance indicators can be the most powerful. So a lot of these things I'm going through fairly quick. We could honestly spend probably an entire day on every single one of these, but at least it tells you what the R is. And then T is where you want to talk about transactions. So T stands for transactions. And again, if we go back to these like two pieces of paper, every single line item on there is going to be a grouping of transactions. So what you want to do in your head when you look at a line item and you say, I have no idea what this line item means, try to think like, what are the transactions behind it? Like, what is ultimately happening in this business? So for example, expenses, right? You might be thinking of, so if you go back to where we said everything is a revenue, an expense, an asset, a liability, or an owner's equity, and then you were to drill one layer deeper into the iceberg. Well, expenses have different categories of expenses, right? You might call it G&A, you might have your O&M, you might have interest expenses, you're gonna have different categories. But then maybe you wanna take just your category of O&M expenses and you wanna go one layer deeper. Well, it's transactions that are made up of salaries, travel, training, office supplies. So kind of think of it like an iceberg where when you're looking at a set of financials, you're going to want to continuously go one layer deeper, one layer deeper, one layer deeper to kind of figure out what's happening in the business so that when you look at that number, you understand what that number represents. So that's a really quick take through SMART. So again, that was just to kind of walk you back through what those particular steps were. It's just a way to keep you from getting overwhelmed when you look at financials. So look at the scope, give yourself 20 seconds to say like, does this make sense? What am I looking at? Kind of get yourself oriented. M is materiality. Start with the big numbers and start knocking your way down from there. A is for ask, which is to just remind yourself that it is okay to look at the numbers and have follow-up questions. That means you're doing it right, not that you're doing it wrong. R is for relative, so there's no such thing as good or bad. It's good or bad compared to something, so R is relative. And then T is transactions. If you're looking at something, remember that what you're looking at is a grouping and an aggregation of multiple things that took place. So when you start breaking it down into the most individual components and understanding the transactions, then the way that they roll up start to make a lot more sense. So that is what we cover off with SMART. So I, like Alexis mentioned, I do run a company called Finance Learning Lab. We do focus far more on startups and smaller businesses, but we have virtual CFO services and offer different workshops to be able to make finances make more sense to people. Really want to demystify a lot of these concepts. And lastly, I just want to say congratulations. You talked to an accountant and you didn't die, or at least you listened to an accountant and you didn't die. So I think give yourself a pat on the back. I would love to kind of just make a few minutes available now for, any questions you have. I'm here to be able to help and serve as a resource for you. So, if you've come across terms or kind of just